we have.
For departmental records, we call it departmental records because we need to analyze the costs incurred, the expenses incurred by each department. That is why we have departmental records. So we have departmental records because each department within the organization would have incurred certain expenses. So these expenses are, because they benefit from that expenses, it has to be shared amongst them. So without having a departmental record, we cannot apportion different costs or different expenses to different departments. So the purpose of departmental record is to measure the performance of each department. That is what departmental record is about, to measure the performance of each department. And when you are measuring the performance of each department, it means you want to know how well they behave, how well they do, in terms of what their contribution is
Between them.
towards the business as a whole.
Okay.
That is what a departmental record is. Do you get that point? So preparing departmental records. So to prepare it, the first thing you do is you get your gross profit, which is the cost. The gross profit is sales minus cost of sales. This is actually what the profit of the business is in terms of trading. That's what the business is trading. So as soon as the gross profit is done, whatever you have to take away from expenses has to be apportioned to different departments. So you stop at the point of gross profit, just like the sole trader. But for the sole trader will have gross profit and expenses taken away from gross profit to get the profit for the year. But here, gross profit will be taken away from expenses of each department. Do you understand the point here? So gross profit will be obtained, then the transfers of inventory between departments, which allows the cost of the department, which originally purchased the inventory, will be taken away and added to the department which needs the inventory. So there will be transfer. So transfer means the original department that purchased it. Okay, the purchasing department might purchase something that is useful for the general service department. So as soon as it purchases it, the amount it purchases will be taken away from it to the general service department. So that is what transfer is about. I think you get it. So there's always going to be double entry there. So you debit the transfer of inventory to the receiving department, and you credit transfer of inventory to the giving department or the original department. Is it clear? Is it clear, please?
Yes.
So now we go to preparing departmental records.
You have activity 1 before that.
Okay, yeah, let's just go to activity 1. So the activity 1 is here. They said auto parts as to departments, a new car sales department and service workshop. The following were in the books at 30 November 2017. There's revenue, there's new car sales and service department. So we have two departments here. We have new car sales department and service department. So all the items goes to either new car service sales department or service department.
Okay.
So we prepare the extract, the statement of profit or loss account. So revenue is there, 870,000 for new car sales department, 120,000 for service department. You add opening inventory. We have the opening inventory. New car sales 130,000.
But then you do the cost of sales for the opening inventory.
No, we have opening inventory. You have to find your cost of sales. What adds up to your cost of sales? The items in your cost of sales are purchases. You had opening inventory. If there is carriage inward or outward, you had. If carriage inward, if there is, you had. If there is none, you don't leave it. Then you have transfer. If there's transfer, you add it up to it. For the original department, you less transfer from the original department, you add it to the receiving department. Are you with me? Then you less closing inventory. These are your cost of sales. You less cost of sales from your sales.
Okay.
So your sales here is 870,000 for new car sales department.
Yes.
And for service department, the cost of sales is 120,000.
Yes.
So the sum of the items in the cost of sales, the items for the cost of sales for new car sales department are the purchases, the opening inventory, the closing inventory, and the transfer, which you are adding up.
Okay.
On the other side, the service department, you have the opening inventory, you have your purchases, you have closing inventory, which you have to deduct from it, and you have to add up, or you have to less the transfer. So here we have opening inventory, add purchases, transfer of 5,000, which is going from general service departments to new car sales department. You add it, then you less closing inventory. So that gives us 430,000. That's your cost of sale. And gross profit is always sales or revenue minus cost of sales. So the gross profit for new car sales department is 870,000 minus 430,000, which is 440,000 for the new car sales department. Then for the service department, our sales for service department is 120,000. You less your cost of sales, which is 20,000, 80,000, 20,000 minus 5,000. Because the 5,000 is about transfer, which has gone from the service department to the new sales department. So if you are adding it to the new sales department, you have to less it from the service department. That's why you credit it here, you debit it here.
Okay.
So debit is addition, credit is minus. I think you know that. So that's how we got it. So our gross profit for new car sales department is 440,000. Our service department has 45,000 gross profit. I think it's clear.
Yeah.
So that takes us to how. So we're going to allocation. So preparing departmental records, allocating expenses. So to allocate expenses, preparing departmental records, allocating expenses here. Thank you. In the process of preparing departmental accounts, in the format of statement of profit or loss, there's always going to be a problem. The problem is how we apportion the expenses, because there are some expenses that if they are directly involved, it's fine. Like we have the finance department. We know there's accountant in the finance department. We know we have account clerk in the finance department. We have accountants there. We have these people there. So their wages can be calculated through. It is an expenses for that department. But when it comes to rent of the old building, when it comes to rates of the old building, when it comes to salaries of managers, of a manager that does not belong to one department, that is difficult to apportion. Do you understand?
Yeah.
So the point is, as soon as we have difficulties finding a way to record our departmental expenses, we use what we call apportionment. So the solution for that problem is called apportionment. So what is apportionment? Apportionment simply means you share expenses between different departments to be able to give a fair value to those departments that enjoy the benefits. Do you get the point here? When you share you're going to share it based on the company policy, what each department will get for benefiting from that item. So here I wrote apportionment. This is the process whereby expenses are shared out between departments on a rational basis decided by the business, which is policy, which accurately reflects how the overheads were incurred. So which department incurs what? So that is what apportionment is about.
Perfect.
Is it clear, please?
Yes.
So how the methods in which we can apportion these
Wages.
the methods of apportioning them.
Can we read them? Wages.
Yes, I'm going to start with wages.
Employee cost for each department.
So let me just explain this. So wages, that means the actual employee's cost. So how much was each department? How much has each department spent on wages? That is for wages. Then we go to management salaries. We're talking about the managers. So the numbers of employees in each department divided by wages cost.
Yes.
Take care. So for management salaries, the number of employees in each department divided by the wage cost. So we have a manager for different departments. How many workers are in each department? So the number of each, how many workers are in each department? How much is their wages? So that is what we calculate the management salary.
Okay.
So the manager has finance departments to take care of, human resources department to take care of, and maybe logistics department. So the manager is working in 3 departments. So they will calculate the numbers of workers in each department to allocate the expenses.
Okay.
Do you get it? Then rent and rate eating, the floor space occupied by each department. Finance department occupies the first floor. What is the expenses of the first floor in terms of rent? We have 3 floors. The total amount is 1,000. So that means we have 3 floors. We have 3 departments. We divide by 3. Clear. Insurance, the floor space occupied by each department. So insurance, rent, heating and lighting, you calculate it based on the floor occupied.
Yeah.
I think it's clear. The marketing expenses. For marketing expenses, the amount of money generated by each department. Because marketing allows a business to increase its revenue, right? So now we check how much is being generated in terms of revenue for each department. Then we have general expenses, the revenue generated from each department. Then we have depreciation, the cost of non-current assets for each department. Oh, department A has 4 equipment. Oh, department B has 2 machinery. Department C has laptops.
Yes.
So the cost of non-current assets used by each department will be used to calculate it. So why do we do all this? Why do we apportion? We apportion because it means the business is attempting to share out the cost, the overheads, the expenses to each department that benefits from that expenses.
So each department benefits from these expenses.
Do you understand? From using that resources.
Perfect.
Is it clear? So this is where we stop for today.
So by the way, we have 30 minutes of last pass.